When you hear the word recession, what's the first thing that comes to mind? For many, it's a feeling of dread, images of job losses, shrinking savings, and overall economic uncertainty. It's a scary time, and for good reason. But what if I told you that these challenging periods actually hide a surprising secret? A secret that has historically created more wealth for some than any other time? It sounds counterintuitive, right? How can an economic downturn, a time when things are supposedly getting worse, be a breeding ground for new millionaires? This is the paradox we're going to unravel today. You might have heard whispers, or perhaps even seen TikTok influencers talking about recession millionaires. Well, it's more than just a trend, it's a documented historical phenomenon. First, let's make sure we're on the same page. What exactly is a recession? Simply put, it's a significant decline in general economic activity. Think of it as the economy taking a major step backward, usually marked by things like reduced spending, falling employment, and declining business activity across various sectors. It's not just a bad feeling, there are measurable indicators. Now for the proof. A study from Fidelity Investments, published in 2025, revealed something incredible. A staggering 88% of millionaires built their wealth through self-made efforts. And here's the kicker, a substantial portion of that wealth was accumulated during times of economic downturn. This isn't just theory, it's backed by real data on how wealth is actually created. This isn't a fluke from a single study. History consistently shows us this pattern. Economic downturns have produced more millionaires than any other period in modern history. From the Great Depression to the 2008 financial crisis, and even the 2020 pandemic recession, these times have repeatedly offered unique pathways to significant wealth for those who understand how to navigate them. So, why this counterintuitive phenomenon? Recessions create unique investment opportunities for those prepared to act when markets retreat. It's like a reset button for the economy. The usual rules get shaken up, and new windows open that simply don't exist during booming, stable periods. It's about being ready to see and seize those windows. Usually, a recession follows a credit-induced boom. Think of it like a party that got a little too wild. Money was easy, asset prices soared, and some sectors became overinflated, creating what economists call distorted markets or bubbles. These prices weren't based on true value, but on speculative excitement. When that bubble inevitably bursts during a recession, the market corrects itself. Previously inflated sectors collapse, and assets that were once overpriced now plummet to incredibly cheap and get cheaper. This creates a rare situation where high-quality assets can be acquired for a fraction of their true worth, a phenomenon rarely seen in bull markets. Who benefits from this? Rational people who look at values take positions in A. These aren't people driven by panic or emotion. They're doing their homework, understanding intrinsic value, and making calculated moves when others are selling in fear. They see the temporary panic as a chance to acquire long-term value. Another key factor is forced sellers. During a recession, many individuals and businesses face financial distress. They might need cash urgently to cover expenses, pay debts, or prevent bankruptcy. This forces them to sell valuable assets, whether it's property, business shares, or entire franchises, even if it means taking a significant loss. These forced sales are where millionaires are made. Prepared individuals can step in and buy franchises, property, or equity stakes at discounts. You're acquiring good assets, sometimes excellent ones, for pennies on the dollar. It's a strategic move to capitalize on the temporary misfortunes of others, turning their urgent need to sell into your long-term gain. The stock market is a prime example. During recessions, stock prices nosedive. This isn't because the underlying companies are suddenly worthless, but due to widespread panic and economic uncertainty. Smart investors, including millionaires and billionaires, see this as a golden opportunity to purchase them for pennies on the dollar, knowing a recovery will eventually come. Money expert Jaspreet Singh knows this phenomenon well. He states, more millionaires are made during an economic recession than at any other time. His message is clear: these periods, which most fear, are actually the most fertile ground for wealth creation, but only for those who understand the dynamics at play and are ready to act. This reaction across multiple markets leaves an opportunity to strike it big. It's not limited to just stocks. We're talking about real estate, businesses, even alternative assets. Every recession, despite its challenges, reconfigures the economic landscape, opening up new avenues for savvy investors across diverse sectors. To capitalize, you need a critical mindset shift. Instead of focusing solely on surviving, you must be willing to transition to thriving. This means moving past fear and actively rethinking your strategies. It's about seeing the downturn not as an end, but as a strategic beginning for significant financial growth. In these turbulent times, agility is paramount. To identify a new opportunity, you need to look, listen, learn, and be nimble. This means staying informed, paying attention to market signals, being open to new ideas, and quickly adapting your approach. The slower you are to react, the more opportunities you'll miss. Jaspreet Singh reiterates, if you want this to happen, you have to be prepared. You have to be financially educated. Knowledge is your most powerful tool. Understanding market cycles, valuation, and investment principles empowers you to make informed decisions, rather than reacting out of panic. This education transforms challenges into opportunities. Millennial personal finance expert Dominique Broadway echoes this sentiment. She advises viewers to use the recession as an opportunity to level up. This isn't just about financial gains, it's about leveling up your skills, your knowledge, your network, and your overall life so you emerge from the downturn stronger and wealthier. Recessions can be a fertile ground for new businesses. This environment is supposed to favor new startup innovation to adapt to new and changing markets. When old systems falter, new solutions are needed. Nimble startups can identify these unmet needs, adapt quickly, and capitalize on the changing economic landscape, birthing new companies and millionaires. Real estate, like stocks, often sees significant dips during a recession. This creates prime conditions to buy property at discounts. While many homebuyers hesitate, those with cash or access to capital can acquire valuable assets that will appreciate significantly when the market recovers, laying a foundation for long-term wealth. Even volatile assets like cryptocurrency can offer unique recession opportunities. Some experts predict that a 2025 recession could actually send Bitcoin's price soaring and create new crypto millionaires. While inherently risky, historical data suggests that crypto markets can experience significant booms coming out of economic contractions, rewarding those who invested strategically. Gold has long been considered a safe haven asset, meaning it tends to hold or even increase its value during economic uncertainty. Why the next recession could create gold millionaires lies in its stability. As other assets falter, investors often flock to gold, boosting its demand and price, making it a protective and potentially profitable investment. Let's be frank, the observation that the rich get richer in a recession isn't just a cynical remark. Harrods managing director Michael Ward candidly stated this, explaining that those with capital and knowledge are best positioned to capitalize. This phenomenon has been studied by economists since the Great Depression. Economists call this countercyclical behavior. It means that earnings inequality rises during recessions and contracts during periods of economic growth. While it sounds academic, the practical impact is that wealth tends to concentrate more during downturns for those who are prepared, exacerbating the gap for those who aren't. It's crucial to acknowledge the harsh reality for many. Recessions can be devastating. As some sources warn, a recession could create a lost generation of American workers, setting back young entrants into the labor force by years or even a decade. This video isn't to dismiss that struggle, but to equip you to avoid it and even thrive. So, a recession presents two very distinct paths. One path, unfortunately, leads to hardship and setbacks for many, especially the unprepared. The other path, however, leads to unprecedented opportunities for wealth building and financial advancement for those who are strategic and informed. Which path will you choose? The key takeaway here is that while recessions are unpredictable events that can collapse parts of the economy, all you can do is prepare yourself. This preparation is what shifts you from the path of hardship to the path of opportunity. It's about being proactive, not reactive, when the economic tides turn. Ready to learn how to prepare? Money expert Jaspreet Singh outlined 7 things to do to build wealth in the next recession. These are practical, actionable steps that can transform your financial outlook during challenging times. Let's break them down, so you can start benefiting from this downturn. Before you even think about investing, secure your basic needs. An emergency fund, typically 3 to 6 months of living expenses, is your financial safety net. It provides stability, prevents you from panic selling assets during a dip, and gives you the peace of mind to spot opportunities without desperate pressure. High-interest debt, like credit card balances, is a significant drain on your finances. Paying it down liberates capital that can then be used for strategic investments. It also reduces your monthly financial obligations, making you more resilient and flexible during a recession. As we've stressed, you have to be financially educated. Dedicate time to learning about investing, economics, and personal finance. Read books, take online courses, follow reputable financial experts. The more you understand, the better equipped you'll be to identify undervalued assets and make informed decisions. This is where the rational people who look at values come in. Learn to identify assets, whether stocks, real estate, or businesses, that are temporarily undervalued due to market panic, not fundamental flaws. Research strong companies, good properties, or promising ventures that are simply on sale. Don't put all your eggs in one basket. Diversification spreads your risk across different asset classes, stocks, bonds, real estate, commodities, even crypto, and industries. This way, if one sector struggles, your entire portfolio isn't wiped out, and you're positioned to capture opportunities wherever they arise. Investing during a recession requires a long-term perspective and immense patience. You're buying for the eventual recovery, which might take months or even years. Ignore the short-term market noise and focus on the power of compounding and long-term growth. Millionaires aren't built overnight. The economic landscape can shift rapidly during a recession. Your plans need to be flexible. Stay open to new information, reevaluate your strategies, and be ready to pivot if new opportunities emerge or old ones fade. Agility allows you to ride the waves of change rather than being crushed by them. These steps collectively form your shield and your sword during a recession. If you want this to happen, you have to be prepared. It's not about guessing market bottoms, it's about having the financial education and discipline to act when opportunities present themselves, transforming fear into advantage. Let's dive deeper into what look, listen, learn truly means. Look for emerging trends and unmet needs. Listen to what experts and the market are telling you. Learn continuously, expanding your knowledge base. This active engagement allows you to spot opportunities before they become obvious to everyone else. For entrepreneurs and business owners, recessions demand a rethink a few of your business strategies. This might mean optimizing costs, exploring new markets, or innovating your product or service. Crisis often forces creative solutions, and those who adapt become stronger, securing their path to multimillionaire status. Small businesses actually have an advantage here. The smaller your business is, the more agility you have. They can pivot faster, respond to changes more quickly, and often identify niche opportunities that larger, slower companies miss. This nimbleness can be a superpower during a downturn. It's common that during or soon after a recession there's money on offer, if you are brave enough to go find it. This isn't about reckless risk-taking, but about courageously seeking out and pursuing opportunities when others are retreating. Bravery, combined with financial education, is a powerful mix. Remember, this isn't about luck. It's about strategy. Rational people who look at values take positions. Millionaires aren't just getting lucky breaks, they're employing deliberate, value-driven strategies, understanding market psychology, and acting decisively when fear grips the broader market. While the threat of a lost decade looms for some, your proactive steps can ensure you're not among them. Instead, you're leveraging the economic shifts to your advantage. This perspective empowers you to protect your financial future and actively work towards building wealth, even in challenging times. Ultimately, your perspective during a recession can dictate your financial outcome. While headlines scream slowdown, savvy investors see unique entry points. It's about shifting your lens from immediate doom and gloom to recognizing the historical patterns of wealth creation that emerge from downturns. The wealth built during a recession often tends to be more resilient and sustainable. By acquiring assets at depressed prices, you're building on a stronger foundation. This isn't about quick speculative gains, but about laying the groundwork for substantial, long-term financial growth that lasts far beyond the recovery. Let's quickly recap the why. Recessions create millionaires because they present unique opportunities. Market distortions lead to incredibly cheap assets, forced sellers create deep discounts, and rational investors seize these moments, turning fear into fortune across various markets. And the how? It's about preparedness. Build that emergency fund, conquer high-interest debt, relentlessly pursue financial education, identify undervalued assets, diversify your portfolio, commit to patience, and maintain an adaptable mindset. This roadmap empowers you to turn uncertainty into advantage. Recessions might be feared by many, but for the prepared and financially educated, they are periods of immense opportunity. The question isn't whether millionaires will be made, history proves they will. The real question is, why shouldn't you become one? Your financial future is waiting to be shaped. This isn't about being immune to the challenges of a recession, but about empowering yourself with the knowledge and strategies to navigate it successfully. By understanding these principles, you can help protect yourself, financially and otherwise, and use the recession as an opportunity to level up your entire financial life. So, what are you waiting for? The time to prepare for the next economic downturn is always now. Start your financial education journey, review your current strategies, and get ready to seize the opportunities that recessions uniquely offer. Your path to becoming a recession millionaire starts with action, today.